The tight housing sales market has meant that many renters are staying put, leading to price hikes for rent and complicating the overall inflation picture. Joining us right now is Igor Popov, Apartment List chief economist.
Hi, Igor.
Igor, good morning. Thank you for being with us.
Morning, Becky. Happy to be here.
Okay, so let's talk a little bit about this situation. We know the housing market has been really difficult. There has not been supply. That means people can't find houses to buy. That means they stay in their apartments. And that means that those rents have gone up because there's so much demand. What are you seeing right now nationwide?
Yeah, absolutely. The rents are up over 20% since the start of 2020. And in general, the rental market has just been on an absolute roller coaster since the start of the pandemic, really. Typical year rents grow maybe 3%, but we saw rent declines in 2020, skyrocketing rents in 2021 as we saw an explosion of housing demand, really tight supply, and then a real cooling housing market coming on the back half of 2022 with rate hikes and cooling consumer confidence. So that brings us to today. So nationally, we're tracking rents to be roughly flat, down a little bit year on year from last May. But it really depends on where you are in the country. We're seeing a lot of regional divergence. So we have some cool markets in the Sun Belt that are actually seeing rent drops. But if you're a renter in the Northeast or the Midwest, you're seeing some pretty strong rent growth this summer. So renters' experience of the housing market and the rental market in particular really depends on where they are right now. And one of the big drivers is really regional differences in construction right now.
Okay, so where there is additional construction, you don't have as much pressure on rent because there is new supply that's coming on?
Yeah, absolutely. That's good news for renters. There is a lot of new supply coming on. So a couple of years ago, when housing demand was booming, interest rates were low, it was a pretty ripe time for developers to get in on new projects. But those projects have taken a while to hit the market. We actually entered the year with 1 million multifamily units under construction, which was a U.S. record. And that's hitting the market now, but it's not evenly distributed. So a place like Austin, Texas is permitting 10 times as much new housing per capita as a metro like Cleveland or Chicago. And that's really driving the differences that we're seeing. Rents in Austin are down 7%. Places like Chicago, Providence, Cleveland, Milwaukee are seeing 3+% rent growth this summer as we enter kind of peak moving and leasing season.
Let's talk about what this means just in terms of the inflation picture, because the CPI looks at rent a little bit differently. How does it measure it?
Right. So there's really two different stories when we look at market rents and the average rents that Americans are paying, which is really how we measure rent for the purposes of tracking inflation. And so market rents move quickly. They can turn on a dime. The rents that average Americans are paying, they move slowly because most folks are locked into 12-month leases. And as a result, the CPI, the rent measurements that factor into the consumer price index, they lag what we see in the market by really over a year. And so CPI rents are really a shadow of market rents. They're still tracking the deceleration that we were seeing last year in rent growth. And so this creates a pretty tough picture for the Federal Reserve because I think there's a feeling that the housing market has already cooled significantly from rate hikes. But we don't really get the full scorecard until CPI rents catch up to the market. And they're cooling in the CPI, but it's going down very slowly. It's like watching paint dry, and we keep waiting for the CPI rents to come down. They're coming down, but very slowly. And what we're seeing now in the market, if we're seeing a new rebound, and I think we're seeing a new rebound in demand across the country, that again is going to factor into CPI rents 4 to 6 quarters down the line. And I think the bigger concern is that as rents stay higher for longer, that now we're actually seeing suppressed construction, which is ultimately the big story for the housing market over the long run. Is can we get enough housing units onto the market to give renters some relief?